So in this video, I'll show you how to use the Interactivebrokers Trader Workstation to trade options effectively. So let's use an example. Let's imagine I want to make a trade on Amazon. So the first thing is to pull up the charts. So I'll go to my chart tab over here. Again, you can use the trading view charts on the TWS beta version, or you can use the normal Interactivebrokers charts. Now, if you're trading options, you have to use the Interactivebrokers charts because on the charts you can see the 52-week implied volatility rank. Now, especially remember that when you are using option selling strategies like credit spreads, for example, ideally you want to ensure that the 52-week implied volatility rank is high. So ideally you want it to be 30 or above. When implied volatility is high, remember that premium is expensive, and so when you sell options, you get a lot more premium. So how do we get that rank? Okay, so on the Interactivebrokers charts, as you can see here, now remember the way to pull up the charts is you go to New Window. If you don't already have the window, go to New Window, click there, and go to Charts, and go to Chart. So this is the Interactivebrokers chart. The advanced is the trading view chart. So again, we're using this one, all right? So this would bring up this Interactivebrokers chart over here. Then what you want to do is you want to go to Edit, go to Global Chart Configuration, go to Quote Zone, and the quote zone is basically what you want to see on the chart. Like for example, I want to see the low, the closing price, and whatever it is, right? I want to see that all on the charts. So to tell the platform what you want to see on the charts, you have to add it here, right? So I want to see the 52-week implied volatility rank. So that will be under options. Go to options here. Search for 52-week. Now it's already here, so it's not here. Let me put it back, right? So originally you can see it's there. It was there, all right? So I highlight that and then I add it there because I want it on the chart. Got it? Yeah. Now you can put other stuff on the chart as well. So for example, you can put the right. You can put the ask, the bid, whatever you want to put on the chart. But for options, you need that 52-week IV rank. Yeah. Now this 52-week IV rank is equivalent to the current IV percentile found on Thinkorswim. So it's the same thing, they just use different names. All right. Okay. So once we got that, we will apply it. Okay, and it should appear over here. Let me just type Amazon again. There. So can you see that for Amazon, the 52-week IV rank or the current IV percentile, same thing, is 41. So typically remember that when IV is high, you want to use options selling strategies, which is my favorite. And when IV is low, then you use options buying strategies like debit spreads, for example. So let me now show you how to place options orders using Interactivebrokers. Let me give you an example of just simply buying a call option, which is what I don't normally do, but just to start from the basics, right? So you go to your dashboard over here, which we have created in previous videos. And let's say you want to trade on, again, Amazon. So we put Amazon over here. Let's put that into the option chain. And then you select the date to expiration. You can select all this more. Remember to click on weeklies and quarterlies, so you also see the weekly expiry series as well. Click on that. There we go. So if I want to buy a call on Amazon, for example, I would want to buy at least 60 days to expiration, right? So let's choose at least 60 days. That would be about December 15, all right? 59 days, close enough, right? So if you want to buy a call, very simple. I just choose a strike price. For example, I want to buy at the strike price of, currently the share price is 132. So if I want to buy near the money, I buy at a 130 strike price. So to buy, I click on the ask column. To sell, I click on the bid column. I want to buy a call, I click on this. There we are, right? So this comes out in my order entry by the Amazon 130 call expiring on the 15th of December. Click buy and put in the quantity. So in case I want to buy one contract is 100 shares. And then I put my limit order, right? So usually now remember, when you trade options, never use market orders. Always use limit orders, because with market orders, you can get filled at a very bad spread, all right? So limit order, whatever it is, usually we want to put as low as possible to see if we can get filled, and if we can't, we increase the limit order until we get filled. So let's say we put at the middle of the bid and ask, that would be about 950, right? Okay, thereabouts, 950 limit order. Okay, and submit. Now right now the market's closed, so it won't go through. It's a demonstration, so I'm going to submit. Now once you submit the order, it will appear here, right? Click on orders here. That's my order. That's my buy Amazon call order, which will be executed when the market opens later, right? Now when it's ready to be executed, it'll become green. Right now it's like purple, which means it's been transmitted, accepted, but not yet executed. Yeah. Now you can always cancel the order anytime by clicking on the cancel button over here, right? Or you can modify the order, click on the tab and then change it to 940 or 920, whatever you want, right? And then you can always update the order. If you don't want the order anymore, you can then cancel the order, right? Now, once the order is executed and it's filled, it will appear on the trade tab. Click on trade tab. There we are. So yesterday, I executed some orders. I bought some LVMUY. There was a stock. I bought 70 shares. I bought Thermo Fisher. I bought 14 shares. So it all appears in my trade order that has already been executed. And yesterday, I also took profit on my LAM Research bull put option spread. And so you can see that's my filled price and my realized profit. So that's under the trade tab over there. Okay. So that's how you just simply buy a call option. Okay. Now, how do we do more advanced strategies? So let's imagine you want to buy a bull call spread on Amazon. So bull call spread is you buy a call at the money and sell another call at the usually the one standard deviation price. So let's see how to do that. Okay, so first choose the date to expiration. Now first let's look at the charts to see. It has to be a setup that makes sense, obviously, right? So usually you want to buy a bull call spread if you're bullish, right? So if you happen to be bullish on Amazon and you think that Amazon is kind of like, you know, it kind of like retrace and is now gonna bounce back up, for example, you thought, hey, I'll do a bull call spread on Amazon. So you're gonna do a bull call spread. Let me show you how you can do it. Now, whenever you want to do an option strategies that have got more than one leg, right? So it's like a buy one, sell one, or 3 legs or 4 legs, you have to use the strategy builder on the option chain. So let's go to our dashboard again, and you have to turn on the strategy builder for advanced strategies. So click on that. Okay, there we are. Let's pull it up. Can't go higher. Never mind. Enough. All right. So let's buy the Amazon. Let's buy a call at the money and sell another call one standard deviation above the current price. Okay, how do we do that? So first, let's choose a date to expiration. Usually for bull call spreads, for example, we choose about 30 days, right? So let's choose, for example, 17 November expiration date. Okay, so let's buy a call at the money, which is near the market price. And we can use delta to help us as well. So usually we buy near 50 deltas, right? Okay, so now the nearest would be 135 strike. So let's buy the 135 strike. Now to buy, we click on ask. So click there, buy. Okay. Oops, sorry, I clicked twice. Okay, yeah, I clicked once. Okay. So notice once I clicked, I've got this buy order here, right? So buy 135 call. Then I'm now going to sell a call, 1 standard deviation above the market price. Now, how do you check the 1 standard deviation? How do you check that? Well, for interactive brokers, you just have to put your mouse on the strike price and it would appear. Okay. So can you see here it says 0.2 standard deviation? Can you see 0.2? Right? So that's 0.5, that's 0.8, that's 1.2. So we can either choose at 0.8 standard deviation or 1.2 standard deviation. So usually we want to take profit at 1 standard deviation. So it's either 0.8 or 1.2. You can choose either one, right? So let's choose the 1.2 standard deviation, which will be slightly higher than 1. But okay, so we're going to sell the 150 call. There we are. Okay. So let's look at the option strategy before we buy it. Okay. So we're going to buy the 135 call and sell the 150 call. And by doing this, how much does the trade cost? This is a debit trade. It will cost us between $4.14 and $4.27. That's the bid, that's the ask. So now if you want to place the order, then you have to go below. Now you need to pull this up in case you can't see it. Let me just show you there, right? So you go pull this up all the way up and you can see submit order on the bottom right over there, right? Now remember that before you submit any options trade, you have to analyze it to find out what's the maximum loss, what's the maximum profit, to make sure that you understand the profit and loss profile. So the way to analyze the trade is you want to first add it to your watch list. Okay, so click here and it's added to the watch list. Now we then go to the watch list and the Risk Navigator, which we have placed in the options tab over here. Right, so again, this is the Risk Navigator to analyze the options trade, and on the right I've got the watch list where the Amazon trade has now appeared because I added it to the watch list. Now if you forgot how to put these two in the window, let me just show you again. How do you put in this watch list? Go to new window and simply click watch list, and then this window will appear and you can place it on the right. To get the Risk Navigator, this one, go to new window, go to portfolio tools, go to Risk Navigator and go to open new what if, right? That's how you get this guy over here. Got it? Great. So now we are going to analyze this Amazon trade that we just were constructing. So to analyze the trade, what you got to do is this. Now, first of all, let's go to this Risk Navigator. Looks a bit confusing initially, but don't worry. Just close that. Okay. And you see this thing called new. Now, this is where you can add in new option trades that you're analyzing, right? So we're going to copy this. We're going to go to this watch list with our trade that we just created, right? That bull call spread. And we're going to right click and copy that trade. Now, if you're using a Macintosh, you just put 2 fingers on a trackpad and you get this drop down menu and we just copy. Okay, copy this bull call spread. And then we go to this white area over here under new and right click and paste position. And just open that up. And it should be somewhere in there, right? Now notice I already have a lot of current positions. So this Amazon trade that I'm studying just went in there somewhere. So how do we look for it, right? Okay, here's how we look for it. It's here. Yeah. Now, first, let's bring this chart up. This is our profit and loss chart that we'll use to analyze the options trade. On the right, report. Now, we're going to put a risk by underlying. Okay. And then we're going to, under plot, we're going to put equity unrealized P&L. Okay. And which is the underlying trade we're looking at. So this is one where we select Amazon, which is the one we're studying, right? So let's look for Amazon. There we are. That's the Amazon one. Okay, that's the Amazon one. Okay. Currency would be US dollars. Okay, and then just leave it as that. Okay. So notice that there are few Amazon trades because I already have an existing Amazon trade. So I have an existing, I've got the stock here. Now, this is the Amazon stock I have. So now you don't want to check all of it, right? Because then you're studying all your Amazon positions. So I don't want to look at my Amazon stock position. I don't want to look at my Amazon cash secured put. I don't want to look at that. I just want to look at this bull call spread, which I am now studying. So I just check the one which I want to analyze, which is this Amazon 135, 150 bull call spread, right? So only check the one that you want to analyze over here, right? Okay, next. The next thing that you do is you will then go to this chart. Now, notice that there's nothing on this chart, right? There's nothing there. So sometimes you have to uncheck and check again, and then it will appear, all right? So sometimes it's a bit wonky, right? Again, uncheck, check, then it will appear here. Now, a few things we're going to do on this chart. First, do a right click again, and go to vertical crosshair and click, so that now you can use this crosshair to check the profit and loss, right? So you need that's the first thing. The second thing is go to last trading day scenario. Now, this options that we are studying expires on the 17th of November 2023. So the last trading day would be 17 November. There, 17 November 2023. So put this as your last trading day scenario. There we are. Okay. So that will give you this dotted line, which is the profit and loss on the date of expiration. Okay. Now, right click again. And then we want to put what is the profit and loss today, which will be, go to custom date scenario and choose today's date, which is the 17th of October. There we are. Okay. Then right click again, and by default they show you the previous close. We don't want the previous close, so uncheck that. Okay, so there we are. So now on this chart, notice that we have got this line over here. Let me use my drawing tool to highlight this line. Okay, so first of all, can you see this line over here, this one? Right, that is the profit and loss on the date of expiration for this bull call spread. Okay, then this line over here, let's use green. This line over here, that is the profit and loss on today's date, right? So remember that as time passes, what happens? As time passes, the profit and loss, the graph will go up here, go down here until it becomes the profit and loss at expiration. So this helps you to analyze where the profit and loss is every day until the date of expiration, right? So you can use this to simulate the trade. So let's take a look. For this trade, what's my maximum profit? My maximum profit is if the share price, right now the share price is here, right? Currently it's here about 134, right? If the share price goes all the way up here and expires, my maximum profit, okay, let me uncheck and check. Sometimes you need to check and uncheck again. Oh, okay. Okay, my vertical crosshair. Okay, can you see this box that follows me there? Okay, so what's my maximum profit? my maximum profit would be on the 17th of November, which is 1076 US dollars. So 1076 is my maximum profit at expiration. Okay, 1076, because that is when it expires. And what's my maximum loss? So if the share price falls, my maximum loss would be 424. So let me write this down. Okay, so my maximum loss over here is 424. And my maximum profit, okay, sometimes that stupid box disappears. Do you see that? Irritating. So we're gonna go to vertical crosshair again, and okay, still not there. So sometimes you gotta uncheck and check again. Yeah, this is really irritating. Sometimes that happens. All right, now it appeared again, right? So sometimes that happens, okay? So what's my maximum profit again? On expiration date is 1076. There we go. 1076. So I'm risking maximum 424 to make $1,000. So that is roughly 1076 divided by 424. That is a risk to reward ratio of 1 is to 2.5, which is not too bad.